Hello students, you are the future chartered accountants of India. We have completed 5 heads of income. We have completed 3 chapters of that is 3.5 chapters of income tax subject. Then we are going to complete the next important chapter, that is B category, that is deduction. That is chapter number 6 in your study material, but it is very important and hence I am taking now itself. The deduction chapter, that is chapter 6A deductions. Okay. Section 80AC, Section 80AC stipulates the compulsory filing of income tax return on or before the due date specified under Section 139, Subsection 1 as a precondition for availing the benefit of deductions under the head C, that is deduction in respect of certain incomes. You can once go through these incomes, but what is very important is you have to file your income tax return before the due date only in order to claim these benefits. Okay, these deductions. That is only part. That is only important in these sections. No other need to go through ATQQ, BAT, RRB. You are able to see in today's upcoming sessions. Okay, in order to claim these sections that has been specified under ATAC, you have to file your income tax return before the due date. That is a simple logic behind the sections. Okay, then apart from that, we are now going to discuss the next topic, that is the upcoming, that is very important from this onwards, that is very important. Then that is first one, the deduction under chapter 6A is restricted to your gross total income. For example, your gross total income is 2 lakh, or gross total income is 5 lakh, and your chapter 6A deduction is 7 lakh, then it should be restricted to 5 lakh only. The deduction under that cannot be carried forward. Excess 2 lakh cannot be carried forward. Okay, the deduction under chapter 6A is not allowable against LTCG, that is 112 section, LTC general section 112A, and STC section 111A, and special rates of income, that is for example 115BB, that's 30% gambling and lottery income. Or against those incomes you cannot claim the deductions that has been specified here under. First section is section 80C, that is very important for your examination. Eligible or eligible individual or any member of your HUF, maximum deduction is 1,50,000. 1,50,000 is the maximum deductions you can claim. First one is life insurance premium. That is, if you are an individual, then you can claim a deduction in respect of the payment of premium for yourselves and your spouse and your children. There is no parents. The parents are not coming for under in this section. That is very important. And HUF is any member of HUF. Then there is 3 categories. If policy is issued, if your life insurance policy is issued before 1/4/2012, then premium paid, actual that premium paid by you, or 20% of the policy value, that is sum assured. For example, sum assured is 1 lakh, 20% of this 20,000, and you are paying 15,000, whichever is low, only can be claimed as a deduction under Section 80C. If your policy is issued on or after 1/4/2012, then premium paid in or 10% of the policy value, that is in our case, that is 1 lakh 10%, 10,000, or actual premium paid, that is 15,000, whichever is low is 10,000. That only you can claim as a deduction under Section 80C. Okay, if policy is issued on or after 1/4/2013 for person with disability, we are talking only with the third category talks about only the person with disability under Section 80U, or person suffering from specified diseases under Section 80DDB. What are 80U and what are 80DDB? We are clearly going to discuss in the upcoming session of the same chapter. Okay, don't worry. If your policy is after 1/4/2013 and if you are making the life insurance policy for them, and the restriction amount is premium paid or 15% of the policy value. For normal categories of people, it is 10%, that has been discussed in the second category. For disabled person, that is increased to 15% of the policy value, whichever is lower should be claimed as a deduction. Next up, B, deposited ATC, in the first ATC, that is first form is LIC premium. If you are paying the LIC premium, you can claim deduction. Which are other sources of investment that can be claimed as a deduction? That is deposited in public provident fund. If you deposit in PPF account, then you can claim the deduction of up to 1,50,000. All these summarized should be restricted to 1,50,000. If it is more than 1,50,000, then also it should be restricted to 1,50,000 only. Okay, individual, self, spouse, children, HUF, any member of HUF. Then employees' contribution to the statutory provident from recognized provident from or approved superannuation that also forming a part of your ATC deduction section. Then amount invested in NSC, that is National Savings Certificate, as well as interest accrued on NSC bonds. For example, you have invested 1 lakh in this year and accumulated interest for this year is, let's say, for example, 8,000. Then that can also be claimed as a deduction. That is, in total 1 lakh 8,000 can be claimed as a deduction for under section 80C. That is very important. Then repayment of loan taken from banks or financial institution for purchase or construction of house. The interest can be claimed under section income from house property, correct? But repayment portion out of EMI, interest portion can be claimed under section under 24 section B under income from house property. The repayment portion can be claimed under section 80C after your gross total income. Okay, the fixed deposit in a scheduled bank or post office for 5 years or more. The tuition fee is paid for education in India. The education should be in India. Your children, that maximum children can, the maximum allowance, maximum deductions can be only for 2 children. Okay, deposit in notified bonds of NABARD and deposit in senior citizen savings scheme, that is SCSS, in post office can be opened. And contribution, then contribution towards a unit linked investment insurance plan, that is shortly called as ULIP, and notified units of mutual fund. If you are contributing your investment in equity oriented mutual fund, that can also be forming part under section 80C. Then notified pension scheme of UTI or mutual fund, deposit in Sukanya Samriddhi scheme only for your girl child, and stamp duty, registration fees for acquisition of house property. If you pay any of the stamp duty or registration fees, that can also be taken under section 80C. Then by employee of central government as a contribution, the contribution by a central government to a specified amount of pension scheme referred under section 80 CCD for a fixed period of time of 3 years or more, that is called NPS Tier 2. The contribution to the National Housing Bank, that is tax saving term deposit scheme of 2008. For these categories of sources, if you deposit in the previous year, then in respect of which you can claim up to 1,50,000, not for each, it is for entire. Even though the end, for example, if you deposit in LIC, let's say for example 1 lakh, and if you deposit in PPF, let's say 60,000, the total you had deposited in the previous year is 1,60,000, but it should be restricted to 1,50,000 only. It has not been increased yet by our finance minister. It is very waiting from the customers, from the clients. Okay, then very important note: if an SSE terminates his life insurance policy or has not paid the premium after 2 years, then he terminates ULIP or has not paid any premium for more than or equal to 5 years, or he transfers house property before 5 years from the end of the financial year in which the possession is obtained. For example, he should not sell his house property for at least 5 years of the time. If he sells, then what are the procedures? Let's see. An amount withdrawn from FD or senior citizen scheme before 5 years, it should be there for 5 years. Then if he does, then all the deductions claimed earlier should be added back to his income in the year of violation or withdrawal. Very important provision. Okay, then section 80 CCC, the contribution to the pension fund of LIC or other insurance company. For example, individual SSE, who is eligible SSE, that is individual SSE, maximum deductions is 1,50,000. If you contribute LIC pension fund or other any insurance fund, that benefit can be claimed to the extent of 1,50,000. Then section 80 CCD, that is very important for your examination perspective, the contribution to the national pension scheme, or it also mentions, it also called as Atal Pension Yojana, eligible for all individuals. Amount of deduction is under section 80 CCD subsection 1. It talks about in respect of the salaried employee, that amount should be restricted, the deductions should be restricted to your employee's contribution or 10% of the salary. Salary means basic plus DA. Okay, whichever is low can be claimed as a deduction in respect of the salaried employee. If I am a non-salaried employee, a non-salaried individuals, then that restrictions is as follows: SSC's contribution, my contribution to the NPS, or 20% of my gross total income, whichever is lower can be claimed as a deduction under section 80 CCD subsection 1. Then there is talks about 80 CCD subsection 1b, says there is more and above 1,50,000, you can claim additional 50,000 for your contribution, for SSC's contribution. Additional deductions up to 50,000 shall be allowed other than section 80 CCD subsection 1. For example, you have contributed 2 lakh in respect of your self contribution, then up to 1,50,000 you can claim under section 80 CCD subsection 1 by following these conditions. The remaining balance can be claimed under section 180 CCD subsection 1b to the extent of 50,000. In our case, entire 50,000 can be claimed. Okay. For example, we'll take one example. HSC's contribution is 1,30,000 towards NPS. His gross total income is 5 lakh. So the amount will be restricted to 20%, that is 5 lakh at 20% होता है 1 lakh. The remaining can be claimed under section 80 CCD 1b up to 50,000, but here he has contributed 1,50,000, 1 lakh is exhausted, undertaken under section 80 CCD 1. The remaining 30,000 can be claimed under section 80 CCD subsection 1b. Understood? Super. Then in section 80 CCD subsection 2, that is employer's contribution to the NPS for the benefit of employee. Till now we have discussed employee's contribution. Now we are discussing about employer's contribution. Is first taxable under salary because it is a type of perquisite, so it should be added to his salary, and then he can claim a deduction under section 80 CCD 2 to the limit of employer's contribution or 10% of the salary. Salary means basic plus DA. 14% of salary, in which case 14% of the salary in case you are a central government employee, you are a state government employee. Understood? Super. Whichever is less can be claimed as a deductions. Notes as per section 10, section 12, any payment received by SSC on the closure of his account is exempt to the extent of 60%. For example, 1 lakh is received, 60,000 is exempt, 40,000 is taxable of amount payable to him at the time of closure. In case of employee or non-employee, any amount received from NPS by the nominee, legal heir on the death of the deceased is fully exempt. If I have been died, then the entire portion of my contribution is exempt in my legal heir. Okay, then the subscribers of the recognized provident fund or superannuation fund would be able to transfer their corpus fund to the national pension scheme without any tax implication. They can easily transfer their balances lying under RPF, that is recognized provident fund or superannuation fund, to the NPS fund. Okay, then in case of partial withdrawal, if I withdraw partial amount from my NPS account by an employee, not talking about SSE, non-employee, by an employee, the payment shall be exempt up to 25%. For example, I have withdrawn 1 lakh, 25% means 25,000 is exempt of contribution made by him and fully taxable for non-salaried employees. We'll discuss once again. If I am an employee, I have withdrawn partial amount from my account. So of that contribution made by him, so 25% is exempt, remaining is taxable. If I am a non-salaried employee, non-salaried person, then it is fully taxable. That is, entire 1 lakh is taxable. Okay, super. Then in section 80cc, it says about aggregate deductions of 80C, 80cc, 80ccd1 is restricted to maximum of 1,50,000. Earlier we have talked about entire ATC is restricted to 1,50,000. Now they are saying ATC, ATCCC, ATCCD1 is restricted to 1,50,000. They are not talking about ATCCD1B, ATCCD2. You can avail additional benefit for that or your 1,50,000. That is ATCCD1B up to 50,000, ACTCD2 at whatever the employee's contribution to the limit specified here under. Okay, this is over and above of 1,50,000. Then up to 80cc, 80C, 80 and CTC concept is entirely completed. Now we are going to complete 80D, that is deduction in respect of medical insurance premium, central government health scheme, preventive health checkup, and medical treatment. It is applicable for individual or HUF member. In respect of individuals, myself, my spouse, my parents, and dependent children. In respect of HUF, any member of HUF. In section 80C, there are no reference, there is no, what do you call, the concept of the payment, the premium in respect of parent. You can pay, but you cannot claim a deductions. But here you can claim a deduction in respect of the health insurance premium that has been paid for in respect of your parents' life. That is, HUF any member can claim, and mode of payment is other than cash. The payment should be other than cash. Okay, it should be other than cash. They can accepted. But however, for preventive health checkup, the cash mode can be accepted. Super. Next, amount of deductions is as follows. First, we will discuss the individual concept. Next, HUF member. Individual, if I am paying medical insurance, first category, if I am paying medical insurance premium or in respect of central government health scheme or preventive health checkup, I am eligible for all these SSS. The maximum limit is 25,000. Myself, spouse, dependent children. If I pay the health insurance premium in respect of my parents, the additional 25,000 can be claimed. But CG, the central government health scheme is not available for them. In respect of HUF, the limit is 25,000. Okay, plus additional deductions can be claimed if you or your parents are 60 years or more. You are a senior citizen. The additional 25,000 can be claimed here. In respect of your parents, also 25,000 can be claimed. In respect of HUF, also in respect of senior member, you can claim additional 25,000. That is, you can claim for your senior citizens up to 50,000. I will take an example. I am 25 years old. My parents are crossing 60 plus years of age. Then how much amount can I claim? In respect of my contribution, up to 25,000. In respect of my parents' contribution, I can claim 50,000. Overall, about 75,000 can be claimed by me in respect of the premium paid by me. Okay, understandable. Then medical expenditure of senior citizen, for who medical insurance has not been there. You can claim a deduction in respect of your medical expenditure up to rupees 50,000. But the concept, the point is, there should not be any insurance policy in respect of those. Okay, then only this additional benefit can also 50,000 can be claimed in respect of all the categories of people. But remember, there should be proper invoices. If you claim a dummy figure and after 1 or 2 years the income tax officers issues a notice for the proof, for the evidence against which you have claimed that benefit, if you are not available with the evidence, then the penalty would be leviable. That is very strict policies. Medical expenditures, you have to you have to keep a proper record for the medical expenditure incurred. Then only you can claim a deduction of up to 50,000. Maximum deduction is up to 50,000. Okay, 50-50, not 1 lakh, it is 50,000 only. Then 50-50. Okay, super. Then aggregate payment for preventive health checkup. Preventive health checkup means if you once in a year you are going for your health checkup in order to make some of the scannings. That is preventive health checkup. The self, spouse, dependent children and parents cannot exceed 5,000. That cost should not be exceed 5,000. It can be exceeded, but the deductions can be restricted to 5,000. But I will take one example. 23,000 my premium, my self's premium. 5,000 I am for in respect of preventive health checkup. I have incurred 28,000, but it should be restricted to 25,000. Okay, like 25,000 or 50,000 is inclusive of this preventive health checkup. Okay, okay. Then where the medical insurance premium is paid in lump sum for entire period, that is more than 1 year, then deductions for each year shall be in proportionate to this formula. It is like prepaid insurance that you have studied in your 12th or foundation. That is the formula is lump sum amount. Let's say for example, I have taken one example divided by previous year in which the insurance is in force. For example, Mr. A paid a health insurance premium of 50,000 for 4 years. On 1st December 2023, policy tenure is 4 years. That is 1st December 2023 to 30th November 2027. Right? The calculation of insurance premium is as follows: 50,000 divided by 5. Why 5? Because 1/12/2023 lying in 23/24. Then 30th November 2027 is lying with 27/28. So there is 5 years assessment years. Previous year 23/24, 24/25, 25/26, 26/27, 27/28. So 5 years should be apportionate, that is 10,000 per year. Okay, then section 80DD, that is respect of deduction in respect of medical treatment and maintenance of handicap or dependent relative. The resident individual or HUF can claim the amount reduction is normal. If that person is having normal disability, then you can claim 75,000 flat deductions. If you have incurred 50,000 also, you can claim 75,000. The severe disability, that is 1,25,000, the flat, irrespective of whatever amount you have. But the point is, you have to incur some expenditure. The SSC should incur expenditure on the note I have mentioned. We have mentioned SSC should incur expenditure on medical treatment or deposit of any amount for maintenance of such a handicapped dependent relative. The relative means spouse, brother, sister, children, mother, father. In respect of HUF, the members. Under this section, deductions will be reversed. Deductions will be reversed if dependent handicapped person received annuity before the death of the SSC or before attaining the age of 60 years of the SSC. If the dependent person receives any annuity before the death of the SSC who is claiming these deductions or before attaining the age of 60 years of the SSC, then that would be reversed. Whatever the SSC had claimed, that is reversed. Then there is one concept, new concept that has been added in this section, that is 80CCH, deduction in respect of contribution towards Agnipas scheme. Agnipas scheme, there are some contribution that you can claim for. Meaning of Agnipas scheme: Agnipas is a central government scheme launched in 2022 for enrollment Indian youth in Indian armed forces, soldiers. Meaning of Agniveer corpus form, there is theoretical concept. Features you can read by yourselves. Deduction is very important. Section 80CCH provides the deduction in respect of the contribution made in Agniveer corpus fund by the individual enrolled in the Agnipas scheme and the government, central government. Quantum of deduction is 80CCH section 1 says amount paid, whatever amount paid on or after 1st 11/2022 in his account in the corpus 1. Deduction 80CCH section 1 is not applicable if you are opting for 115 BSc. Would be available to an NSA only if he has exercised shifting out of default tax regime. That is, if you are opting for old tax regime, then only this benefit would be available. If you are opting for 115 BAC, no deductions can be claimed. Under Section 80 CCH, the whole amount of contribution made with the central government to the set amount of an SSC. SSC also contributes, central government also contributes. Whatever amount has been contributed with the central government can be claimed under Section is mentioned under Section 80 CCH subsection 2. In the Agniveer fund is allowed as a deductions in completion of total income of SSC. The entire central government's contribution to the Agniveer fund would be included in the salary of the SSC. That should be included in the salary. However, deductions in can would be available for the same. Deduction under Section would be available to an individual irrespective of the tax regime. But 80 CCH-H1 specifies if you are only opting for old tax regime. 80 CCH subsection 2 allows deductions irrespective of the tax regime that you are following. If you are old tax regime, new tax regime, you can claim a deductions in both the tax regime. Okay, then exemption to a payment of to a specified any payment from the Agniveer corpus fund to a person enrolled under the Agniveer scheme is fully exempt, or is nominee is fully exempt. Okay, then section 80 DDB. Then section 80 DDB. It says deduction in respect of medical treatment or specified disease. There are some specified diseases that have been mentioned, for example, brain tumor and cancer, etc. The resident individual or HUF can benefit from this, and amount of deduction is actual expenditure on the treatment or maximum 40,000 or 1 lakh, whichever is lower, minus if you have covered any claim or any insurance, that should be reduced in order to avail the maximum deduction amount. Normal case 40,000. In case of senior citizen, that amount, that limit is enhanced to 1 lakh. SSC should have incurred expenditure on the treatment of specified diseases for self, dependent relative, that is that the relative should be dependent, spouse, children, parents, brother, sister. In case of HUF, any dependent member. Okay. Then section 80U, it says the deductions for handicapped SSC. It talks about only for resident individual. Amount of deduction is that we have discussed under section 80DD. Here the same concept is applicable for SSC is having a disabled. Myself having a disabled can claim myself under deductions. If I am having a normal disability, and the Mr. A is having a normal disability, then flat deduction is 75,000. But he should incur an expenditures. If Mr. A is having a severe disability, then flat deduction is 1,25,000. The same that we have discussed or we have covered under section 80DD. Okay, 80DD concept. If your relative party in respect of your relatives, 80U talks about in respect of you yourselves. Okay, 80E deduction in respect of interest on loan for higher education in India or abroad. If you are taken any educational loan, if you are paying the interest on the same, you can claim a deductions in respect of that. The eligible SSC is individual. Amount of deduction is interest amount for a period of 8 consecutive years, starting from the year in which SSC starts paying the interest. For example, I have started my payment of interest in 2023. The 8 years she is counting from this 23-24 up to next 8 years, up to next 7, up to 8 years. Okay, the deduction is allowed if loan is taken for the education of self, spouse, children, any student from whom SSC is acting as a legal persons. The education is not only for spouse, not only for self. It can be for in respect of the education for your spouse, children, or any other persons to whom you are acting as a legal person. Okay, then 80E talks about deduction in respect of interest on housing loan. So what is confusion is lying there is deductions in respect of interest can be claimed under section 24, correct? Over and above that deductions, that is 2 lakh, you can claim the deduction under section this one. In the individual SSC, amount deduction is up to 50,000 only. Condition: the loan should be borrowed from banks or financial institution. FI is financial institution for the acquisition of residential house property. It cannot be borrowed from hand loan. The purchase price should of the house property should be less than or equal to 50 lakh. The loan should be sanctioned between 1st 4 2016 to 31st March 2017. The loan should be sanctioned between in these term only. Why is important in this tenure? Because there might be a chances of balance amount of interest or EMI can be lying. The loan amount should be 35 lakh or less. SSC should not own any house property that is residential on the date of sanction of loan. At the time of sanctioning of loan, he should not own any other house property apart from that house property on which he is claiming a deduction. First, the deduction should be claimed under section 24 section B under income from house property up to 2 lakh. Over and above the deductions can be claimed here up to 50,000. Let's say for example he has his interest portion is 3 lakh. Up to 2 lakh he can claim under section 24B. Balance 50,000 can be claimed under section 80E. Remaining 50,000 gone. Section 80EEA, deduction in respect of interest on housing loan. Individually is those individuals who are not covering under section 80EE. The deduction is 1,50,000. It is far better from the earlier section. But the condition is the same bank or financial institution you have to borrow. The SDV, that is stamp duty value, should be less than or equal to 45 lakh. Earlier we have discussed the purchase price. Here we are discussing about SDV should be less than or equal to 45 lakh. The sanction date should be between 1st 4 2019 to 31st March 2022. 3 years they have provided that limit. The SSC should not own any other residential house property on the date of the sanction of debt of loan. The same concept. Where a deduction is claimed under section 80EEA, the deduction shall not be allowed under any other provision of this act. No problem. First, the deduction should be claimed under section 8024 section B up to 2 lakh under income from house property. Over and above the interest can be claimed here under section 80EEA up to the limit of 1,50,000. Super. Then section 80EEB, it talks about deduction in respect of interest on vehicle, electrical vehicle loan. Individual or applicable to all individuals. Maximum limit is 1,50,000. We are talking about only interest concept, okay, not the EMI, only interest. The condition should be you should borrow loan from bank, financial institution. In addition, you can also borrow from NBFC, non-bank financial corporation. In above two section, there is no concept of NBFC. There is concept of NBFC for the purchase of EV, that is electrical vehicle. The sanction date should be 1st 4 2019 to 31st March 2023. 4 years they have provided the limit. Where deduction is claimed under section 80EEA, then no further deduction should be allowed for an SSC in any other provisions of these sections. Okay, this is a part 1 of this chapter. The balance, there is only one part is remaining in this chapter because it takes some time. So we are completing the part 2 in the next tomorrow or day after tomorrow. I have provided all the videos and just you have to revise the concept very thoroughly because this is a very important chapter from your examination perspective, and so please revise the concept. Till then, see you all and have a nice day. This is Abhijith Acharya signing off from Abhi CA Classes YouTube channel.